Welcome back to the Schaeffer's Market Mashup. This is your host, Patrick Martin. Thank you for tuning in to last week's episode with Adam Warner. Even though he's a Knicks fan, he had some great insight into the VIX. But today, I'm very much looking forward to diving into the Russell 2000 Index in the world of small caps. I've got two guests with me. The first is Arin Risk Advisors investment strategist, Joe DeSipio. Joe, say hello to the crowd.
Hello, everyone, and thank you for having me, Patrick.
And then we have Cboe Global Markets Derivative Sales, Rick Rosenthal. Rick, what is happening?
Hey, Patrick. Thanks for having us. It's great to be here.
What wonderful, wonderful. Hope everybody's doing well. Well, let's jump right in. It's a small cap world right now for U.S. market participants as the RUT continues to leave large cap benchmarks in the dust. You know, even with, I think, today's pullback, the RUT is around 10% higher year to date and has doubled off its March 2020 lows. So I guess the first question, and I'll toss this one to Joe, is will this breakout stick? It sounds like small ball, which as a basketball fan I'm going to coin because I've never heard anywhere else. Small ball is going to be around for the time being, right?
Well, I don't know about right, but it certainly appears that way. Because if you take a look at some of the attributes that small cap stocks offer in comparison to, say, large cap stocks, the valuations that we see in small cap stocks are still a bit inexpensive relative to large cap stocks. And as people have this ongoing need to find value for their clients, even though people say value may be dead as an investment strategy and growth is where it's at, there's still a large number of investors out there who still want to invest for, the long term and make sure they're paying decent prices for it. And the place where you can do that right now is in the small cap world, just because I don't think everyone's found small cap as readily as they found large cap, especially the FANG names over the last few years. Mm-hmm. And especially since the rebound recently, everyone's kind of flocked into the small cap space, which is really, as you mentioned, boosted their performance relative to the large cap names.
So I'm looking at a chart here, year over year, of the RUT, and you can trace some of this small cap rally really starting to pick up steam in November of 2020 when you had the COVID-19 vaccine rollout announcements. Does that mean that market participants are more optimistic about 2021 as a whole? Joe, you can take that, and then Rick, you can follow up.
Sure. I always view investing as a mosaic, and one of the tile pieces would certainly be investor expectations based upon an economic rebound. So in that regard, I think that's a net positive for small cap names. But as you pointed out, since the vaccine news and the stimulus news has become a lot more clear to folks, I think people have been a lot more willing to invest. And again, getting back to my previous point, they've been trying to find positions where they can invest that offer them, good bang for the buck, and that has been in the area of small caps.
Okay.
I'm going to echo some of Joe's comments, but there's always uncertainty in the market, and it's hard to predict by even some of the best experts in the industry. But I'm a glass half full kind of guy, and I am optimistic. And I believe that market participants have reason to be more optimistic about the U.S. economic recovery with the vaccine rollout. And we've got, let's keep in mind, the Fed keeping rates low and a potential huge stimulus coming from the U.S. government. What's interesting, something you pointed out, Patrick, is that the Russell 2000 has been affected by the rollout of the vaccine, and I agree that the small caps could be the story here. They've led the rally, and what they do is they measure the performance of small companies. For the Russell 2000, these are companies that have a market cap between 150 million to 5 billion. And since last August, the Russell 2000 has been on a tear. It's rallied about 45% to new record levels. And this compares to the S&P 500 rallying about 14%. So this is really a moment where the small caps have significantly outperformed their large cap counterparts. If you look at what happened in 2020, the storyline was, besides volatility, most of the performance has been narrowly focused and led by a handful of tech companies like Apple, Amazon, Tesla, and Google. Mm-hmm. And we're seeing a rotation out of the tech stocks into the small caps. And as Joe pointed out, a lot of that is driven by value opportunities. Market participants are recognizing that there are value opportunities within the small cap segment, particularly when we're looking at an early stage of an economic recovery.
And on that note, is that typical behavior for small caps to tend to outperform during economic downturns and then almost act as an early or as a leading indicator during like the early stage of an economic expansion? Joe, you can take that one.
Yeah, I just went back over kind of like the last 5 NBER recessions. That was like in the early 80s, the early 90s, the early aughts, the mid 2000s with the credit crisis, and then the most recent pandemic crisis where we've gotten into this recession category. In each of those markets, as we've come out of that, small caps have significantly outperformed large caps. And just by the kind of the back of the envelope numbers I came up with, it's somewhere around 20%. So that's a huge differential as the economy is getting itself out of a recession. So there seems to be, a very high beta, if you will, to economic rebound for small cap names versus large cap names. And this last go around has not been, disappointing. We're still, I think the performance differential is roughly, 25% if we start from like October 31st out till March 4th or so.
So you mentioned this time around. Is there any context that a retail trader can look at this current rally and say, like, okay, this has happened at other points in history where small caps have outperformed? Rick, you can take that, and then Joe can follow up.
So I want to point out that when we're looking at the Russell 2000, this is an index that measures the performance of small cap companies that are domiciled in the U.S., and these companies generate the majority of their income domestically. Typically, these small cap companies are leveraged, they're nimble, and they tend to outperform larger companies during periods of economic expansion. And so what we've seen in the past, over the past 4 decades, the large cap stocks have typically outperformed the small caps in large measure due to the sector weightings in the indexes. The tech sector has been the main driver of economic expansion. And if you look at the sector weighting for information technology in the S&P 500, it's over 27% versus 14% in the Russell 2000. So what makes this particular cycle different, I believe, it's the combination of the low interest rates, Fed's intention to maintain a low interest rate posture, the stimulation package that's being proposed by the U.S. government, $1.9 trillion, mm-hmm. and the impact that these combined stimulus and the vaccine rollout is creating an expectation that there's going to be a significant impact on the smaller companies, and we can see that from the current rally.
Yeah.
And just to chime in for a second, we also see that in analyst expectations in the small cap space too. So analysts are getting on board with the fact that, as Rick pointed out, these small cap companies have a pretty good shot at growing their earnings as the economy rebounds.
Okay, so when you said analyst expectations, does this mean they were perhaps on the sidelines in earlier months and they're just now coming around?
Maybe a little bit. I wouldn't say on the sidelines. I would say let's use the word less gleeful, less certain, mm-hmm. less positive. But expectations are coming in pretty strong for the small cap space.
Interesting. we started to kind of dance around that, but I want to jump into the inflation expectations since that's pretty pertinent right now. It's not a new phenomenon that the performance of small cap versus large cap tracks inflation expectations. 2020 is a perfect example of that. Joe, do you want to unpack that a little bit, and then Rick can go?
Yeah, I just think for some of these smaller cap names, they, as Rick pointed out, they tend to be highly leveraged. And if you're going to be highly leveraged, in inflation, potentially could be a benefit to you if you're a borrower, right? Because I still have to pay back 100 cents on the dollar. Mm-hmm. I just get to pay back with cheaper and cheaper money. So that may be one reason why the small cap space has benefited a bit from this presumption that inflation is going to pick up. Now, of course, Chairman Jerome Powell of the Federal Reserve would argue that any type of inflationary expectation that people have is going to be short-lived, mm-hmm. and don't get too excited about it, as the Fed is not. So I would just be a little bit cautious in that regard.
Okay.
So to jump in, today non-farm payroll came out. It rose by 379,000. Most of that were jobs created by smaller companies. If you look at what's happened to the 10-year Treasury, it's up by almost 0.5% year to date. And that's despite the fact that the Fed has announced their plans to keep rates low. Mm-hmm. So combination of, rates going higher, jobless, non-farm payroll going up, there's a lot of anticipation that we're going to see a rapid economic recovery. And during a rapid economic recovery, small caps tend to outperform. And we're expecting to see that, and we're seeing that with the outperformance of the Russell 2000 year to date. Inflationary pressures will impact sectors differently, and the large weightings for the Russell 2000 happen to be in healthcare, consumer discretionary, industrials, and financials. And these four sectors are sensitive to interest rates. So the low rate environment has been helpful for healthcare and consumer discretionary. Ironically, when you have a rising interest rate, that's very beneficial to the financial sector. So it's almost like the perfect storm for the Russell 2000 right now.
And I'm going to tell on myself here and say in our dry run, I think Rick mentioned intentional inflation, how it's very important that's when there's intentional inflation, that almost sets up the perfect storm instead of being a random event. Is that correct?
We had a manufactured recession, and we're also experiencing a manufactured recovery. So when you've got the Federal Reserve maintaining low interest rates and pumping money into the system, you have the U.S. federal government creating a $1.9 trillion stimulus package. The intention is to revitalize the U.S. economy. And small caps are on the front line. They were the first to experience the downturn, and they're going to be the first to benefit from this recovery.
Okay, well said. Very well said. Rick, talk to us about the dramatic volume going way up we've seen lately with the Russell 2000 listed derivative ecosystem. And how has this translated into Cboe's launch of mini Russell 2000 index options amidst this rally? Because I know you guys got a big thing that just popped up for you.
Well, thanks. I'm going to potentially embarrass myself by pointing out that I've been in this industry for 40 years and was on the floor of the Chicago Mercantile Exchange when the Russell 2000 index futures were launched in 1993. A lot has changed since then, and the ecosystem for the listed derivatives on the Russell 2000 complex has grown. And I'm happy to say the E-mini Russell 2000 futures moved back to the original home of the CME on July 10th, 2017. And since then, the volume in the futures has grown significantly. A year ago, CME launched a micro mini Russell 2000 futures contract in response to a growing demand from retail participants. And I'm happy to report this past Monday, Cboe listed a mini version of its Russell 2000 index, cash settled index option. And this mini index, ticker is MRUT, is very similar to the standard contract, but it's 1/10 the notional value. So instead of trading a contract that's got a notional value of 220,000, this mini product has a notional value of 22,000. And some of the features that it offers are significant benefit or advantage over the option on the ETF. It's cash settled, it's European style, no early assignment. It's got the 1256 tax benefit, meaning it's a 60-40 blended rate, long-term, short-term. So we've got a lot of interesting products to express a view on the Russell 2000. And if you were to combine the average daily volume on all the listed derivatives based on the Russell 2000, including futures and options, the notional value of this daily volume is 47 billion. And we've seen a significant growth year over year. It's grown by over 66% in terms of average daily volume year over year.
Whew.
So this is a great time for market participants interested in the small cap segment to use listed derivatives like Russell 2000 futures, mini futures, Russell 2000 options, mini index options for managing risk, expressing a market view, trading volatility. You have deep liquidity and price transparency that's offered by these exchange listed derivatives.
How is that for timing? March 1st, you guys roll this out when all eyes are on the RUT right now. I think that's that's perfect for you guys. And congratulations. And then you mentioned trading volatility. So that means that market participants, they don't have to choose between being bullish or bearish, correct?
That's right. Yeah, and volatility is an interesting aspect of trading options. And it's one of the few tools that's available to investors for isolating volatility. So what goes into the pricing of an option includes, the length of time till expiration, the intrinsic value, supply demand factors, and volatility. So Russell 2000 volatility is an interesting component in and of itself because the underlying small caps are leveraged. They're smaller in terms of market cap. There's more volatility associated with small caps. So Cboe calculates a volatility index. Most people are familiar with VIX, which is the volatility on the S&P 500, expressing a 30-day view of future more market expectation of volatility. We have the Russell 2000 Volatility Index, RVX is the ticker. And right now that is 36 compared to VIX at 27. It's got a 10-point premium over VIX. And typically it's about 4. Now it's 10, which tells you that there's an anticipation of continued volatility in the market. Even though the Russell was reaching record levels, it maintained a high level of volatility. And so this is a great opportunity for those participants that want to look at the opportunity to harvest income, harvest premium, kind of like an insurance policy where the insurer is selling its insurance to the buyer, and the buyer is paying a premium to an insurance company. You can think of options along those lines. An option seller is going to collect that premium. And you can see by the volatility on the Russell 2000, there's more premium, more volatility embedded in that product.
Yeah, that's fascinating that you said that there still could be more to come. Even amidst all of this volatility that we've seen in the past 3 months, there's plenty of runway left. And as I noted, there's tons of eyeballs on this. So very exciting stuff that you guys have going on. Joe, and this will be to wrap up here. Rick talked about it a little, but for market participants, are there examples of specific option strategies that someone can keep in mind with a specific view towards the small cap market?
Sure. I think with the introduction of MRUT and the options on MRUT, investors can, test these trades out just to make sure they are appropriate and suitable for them. But some of the trades that people may be interested in would be, selling puts. And that takes on Rick's insurance company example, where you receive an upfront premium, and that's going to be your maximum gain. So if the Russell continues with its move or surge higher, you're only going to participate to that limited amount of premium you collected, and you are going to be facing the downside risk of being short that put. So I just want to be sure that any of these option strategies are mapped out in advance, so your expectations for return are going to match what your realization is of return over time. Other things that people have looked at in terms of just trying to create some additional or differentiated cash flow for investors has been even covered calls. And a covered call strategy is you take your small cap exposure and then you sell a call option against those holdings, and you can use MRUT or RUT for that purpose. And that's another way to generate incremental income. Again, when you're selling those options, selling those call options, you may be faced with capping your upside. So just, again, it's a matter of expectation relative to what strategy you employ.
Yeah, well said. Well said. Rick, you got anything to wrap up with?
Well, I have to say what Joe said is absolutely music to my ears. He's an industry practitioner and an expert and has been doing this for many years. And the reality is, you buy a stock, it can go up or down or stay the same. Same thing with futures. What makes options different is that you can design a strategy and shape an outcome that you're looking for. So, as Joe pointed out, if you own the underlying, the Russell 2000, and you want to sell a call, essentially you're interested in maintaining a long position, but you're collecting income. It's an alternative way to generate income. Cboe's created a number of these strategy benchmark indexes on the buy right, cash secured put right, zero cost put collar. They have one that's gaining a lot of interest, and that's the Russell 2000 Buffer Protect Index. And this is based on an options position that's constructed for a particular outcome. And that's for investors who want to maintain a long position in the Russell 2000, have downside protection, in this case, 9% downside buffer protection, and upside participation. The upside participation is going to be capped because you're selling a call to finance the cost of the put. So depending on how much premium is collected on the sale of the call determines what the upside participation is. But it has a very similar outcome as a structured product, which is used by many advisors today. And this is a great alternative to a structured product because you can have, price transparency. It may be less expensive, and you've got the Options Clearing Corp as the counterparty, and it's a very stable financial counterparty. So options are a great tool for market participants that want to express a market view, they want to shape the outcome, or they want to trade volatility.
Very, very well said, and music to my ears. Everybody, I promise I didn't make them say those things because that's basically a audio version of the education articles that we put out 2-3 times a week. So there you go. If you want an audio book, just listen to our podcast. So I couldn't thank you enough for that endorsement of options at the end. Rick, Joe, do you guys have any? I know Rick talked about the big announcement. Joe, do you have anything you guys want to close with?
No, I just make one final point that Rick kind of touched upon is when you're using listed options as opposed to a structured product, you get to change your mind. And I think that's a very important thing in today's day and age when news is changing. and you want to be able to change your view, listed options allow you to do that.
One thing I'd like to add to that is education is key. And I assume that your listeners are very interested in options and learning more. Cboe is also a great resource for you. I would suggest you go to Cboe.com/RUT for information on the Russell 2000, Cboe.com/MRUT for the Russell Mini product, and then check out our Options Institute. They've got all sorts of webinars and some research available for those interested.
Outstanding. I love ending with plugs. You always got to plug your stuff. We've got Arin Risk Advisors, investment strategist Joe DeSipio, and Cboe Global Markets derivative sales Rick Rosenthal. Gentlemen, thank you so much for coming on. It'll be exciting to watch, what the RUT does in the next 6 months to a year. And, thanks for educating me as well.
Thanks for having us, Patrick.
Cheers, guys.